Hello and welcome to Forex Academy, your number one website for Forex and crypto education and analysis. In today's edition, we will be discussing the FX options market combined volume expiries, a weekly retrospective review for the financial week ending the 12th of the 6th, 2020. If this is your first time with us, the FX currency options market runs in tandem with the spot FX market, but where traders typically place call and put trades on the future value of a currency exchange rate, and these future contracts typically run from 1 day to weeks or even months. Each morning from the Forex Academy website, our analyst Kevin O'Sullivan will bring details of notable FX option market combined volume expiries, where they have an accumulative value of a minimum of $100 million plus, and where quite often these institutional size expiries can act as a magnet for price action in the spot FX arena leading up to the New York cut at 10 a.m. These big institutional players will hedge their positions accordingly. Kevin also plots the expiration levels onto the relevant charts at the various expiry exchange rates and color codes them in red, which would indicate a high degree of being reached, or orange is still possible and where they are said to be in play. He also labels the other maturities in blue, where he deems it unlikely that price action will be reached by 10 a.m. on the New York cut. These should be considered out of play. Kevin also adds some technical analysis to try and establish the likelihood of the option maturities being reached that day. Please bear in mind that we will not have factored upcoming economic data releases or policymaker speeches, and that technical analysis might change in the hours leading up to the cut. So let's look for a few of last week's option maturities to see if they affected price action. Firstly, there were no noticeable options for Monday the 8th of June. So here is the early morning analysis for Tuesday as provided by Kevin on the USD-JPY pair, where there was an option maturing at 107.85 in $390 million. I'll quote you the text as provided by Kevin. USD-JPY has found support at the level option maturity, however the bear move was strong. Expect more downward pressure, the option expiry remains in play. Now let's roll on a few hours into the candle which closed at the 10 a.m. cut. The exchange rate at this time was 107.71, just 14 pips below the strike. So we saw that support held out, but the bears finally got their way and pushed through the support area. Prior to this, the 107.85 maturity had been acting as a magnet for price action. Here in the analysis for the Euro-USD pair, also on Tuesday with a large maturity at 1.1300 for 802 million euros, Kevin mentioned that price action was in a sideways action, and that at the time of writing it was fading and retesting the downside, but that it was oversold on the 1-hour chart and there was important data out in the Eurozone area. Now let's fast forward a few hours. We can see an arrow above the candle which took us up to the 10 a.m. New York cut. Subsequent to this price action pushed to a low of 1.1240, which was suggested by Kevin before rebounding. Price was around the 1.1300 maturity 1 hour before the cut. However, momentum simply carried the pair up to the high of 1.1362. Traders who purchased a premium option for a put would have been in the money as price was above the maturity at the time of the cut. On Wednesday, we had two expiries of the Euro-USD pair, and Kevin's analysis was based on the sideways price action of the pair on the 1-hour chart, and also the fact that it needed to break above the resistance line to form a candle above for a continuation up to the 1.1390 cut to be possible. A few hours later, this was the picture. Price did form a candle above the resistance line and moved to within 1 pips of the maturity before falling lower. Here we can see that price action at the maturity was 1.1366, just 24 pips away. Let's move forward to Thursday. Here we have the Euro-GBP pair, which was trading at 0.8959 at the time of the analysis, where Kevin reposted the bull run was strong. The pair continued to rally during the European session and hit 0.89990 at the 10 a.m. cut, just 5 pips away from the maturity. On Friday the 12th, we had 3 option expiries for the Euro-USD pair. The exchange rate at the 10 a.m. New York cut was 1.1302, just 8 pips below the 1.1310 option expiration level that Kevin labelled. In fact, price action remained elevated until the cut, at which time the pair softened to a low of 1.1332. Let's now take a look at the USD Japanese yen. We have an option expiry at 107.35. Kevin suggested a dip in price action before a retracement to the maturity in his analysis. There was indeed a slight pullback and the continuation higher. And here we can see the exchange rate at the maturity was 107.35, which was an official strike. Please remember that Kevin's technical analysis is based on exchange rates, which may be several hours earlier in the day and may not reflect price action to the time of maturities. We suggest that you get into a habit of visiting the Forex Academy website each morning just after 8 a.m. BST and take the levels and plot them onto your own trading charts to incorporate the information to your own trading methodology. Remember that the higher the amount, the larger the gravitational pull towards the exchange rate maturity at 10 a.m. Eastern Time. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.